Well, welcome to The Real Story. Now, you don't really need a survey to tell you this, but the economy stinks. It stinks on ice. The Consumer Confidence Index, which measures, how 5,000 average Americans feel about the economy, took a nosedive to the lowest level in 5 years. That prompted reporters to ask the president this morning if he would finally agree that we're in a recession.
The average person doesn't really care what we call it. These are tough times. Economists can argue over the terminology.
Yeah. You know what? You're right. I don't care. You can call it sunshine and lollipops. It ain't. I don't care what word people use to describe what we're in. What I care about is whether anybody in Washington is actually interested in fixing the problem. And that usually means just leave us alone. The Federal Reserve is meeting again this week, and all signs point to them again cutting interest rates. Yay! Now they can sit in their room and cross their fingers and hope everything works out for the best. Well, here's a news flash for you, Federal Reserve. It really ain't working out all that great. We're paying the price for your short-sighted solutions, and we're paying for it at the grocery store, we're paying for it at the airport, and we're paying for it at the gas pumps. The real story is that the elitist Fed bankers, who answer to virtually no one, they're not actually part of the government, are more in touch with the high-priced things like collateralized debt obligations than the price of eggs and gas and milk. I want to show you a headline. This was in the Wall Street Journal just a couple of weeks ago. It says, quote, "Inflation spanning the globe is set to reach decade high." Okay, makes sense to me. My gut says prices are skyrocketing. I get it. You can see it, you can feel it. So then could somebody please explain this headline that appeared in the paper that's usually wrong, the New York Times, just a week later? Here it is, quote, "U.S. inflation appears to be retreating." What? I can't figure that out. I looked at it for a while, but maybe the New York Times people don't read the newspapers. I don't know. Maybe it's just that it's breaking news. Maybe it has something to do with the way our government measures this stuff. Could that be it? The big stat they used for that New York Times article is called the Consumer Price Index. And if you believe the official stats, it's totally fine. Nothing to see here, people. Go home. Oh, nothing here. But you and I know there is something happening. The government says prices rose 4% in the last year. Really? My common sense and, my checking account say they rose a hell of a lot more than that. How could there be such a huge discrepancy from what I see in my checking account and what the government is telling us? Everything is fine. I'll show you how it works in just a second. But maybe the more important question is, why? Why would the government benefit if our inflation numbers look a lot lower than they actually are? You ready to really be pissed off? It's quite simple, actually. The answer is in these three little words. Indexed for inflation. The government has tied a ton of major expenses, little things like Social Security benefits that mom and dad get in the mail, to the official inflation rate. So if you think like a slimy, weaselly politician, then you soon realize that we can delay the pain of paying for things like Social Security by keeping the official inflation rate down. Let's just make numbers up. We'll just measure them differently. And if it won't stay on that course, then we'll change the calculation again. After all, statistics may not lie, but liars almost always use statistics. Barry Ritholtz is the CEO and Director for Equity Research for Fusion IQ. Barry, give me an example of how they change the measurements.
Well, there's been a couple of major changes over the past few decades. Most recently, 1996, we implemented a whole series of recommendations from the Boskin Commission. That was a group appointed by the first President Bush, and their results were put into effect by President Clinton. And they came up with some very, let's call it, creative ways of measuring price increases that really keeps the price increases low. My favorite is something called substitution. If the price of steak goes up really high, well, you go out and buy chopped meat, and therefore, look, magic, no inflation. The reality is you've been priced out of the cost of steak.
Right, but as long as you're buying meat, the government says you're still having meat.
Yeah, more or less.
Okay, that's good. Now, this is in the best interest for the politicians, because the politicians will say, look, inflation is only at 4%. We're doing a great job. But it's in horrible interest of the American people, especially if you're on Social Security. Some people believe, tell me if you think this is right, some people believe that the Social Security checks should be about 70% higher than they are?
Well, if you go back to 1983, back then, under President Reagan, and you'll notice this doesn't go by any party. Politicians have been doing this for decades. President Reagan, under him, we changed the way we measure the housing cost of the inflation basket, and that basically said, let's not take into account things like maintenance or utilities or property taxes that we all know have been going through the roof. Let's just figure out what would it cost if you rented your own house back to yourself. And so that really had a major impact. And if you go back from then till about now, over the course of that 25-year period, we would probably be seeing Social Security payments 70% higher than what they are today.
Okay, let me just show this chart real quick. This is the different ways, same numbers, different calculation.
Yes.
This is the way we would be measuring inflations under each of these presidents.
That's right. If you look at the 1983 method, if you go all the way back to the way we did starting 1982, current inflation is running about 11%. And by the way, that's very consistent with the data that comes out of communist China, and it's consistent with what we see out of the United Kingdom. It's a little sad that we get more accurate inflation data from the Chinese than we do from here domestically. The 96 changes that came in takes it down to about 7.5%. My best guess is real inflation is somewhere between the two, somewhere between 7 and 11%, be it 8, 9%, but way, way higher than the 3, 4% we've been told about.
Barry, thank you very much.